Hi guys, so here Anwari here, co-founder of Sublime Trading, here with your daily update for the UK and US indices for Tuesday the 5th of May. Alright guys, hope you've had a good start to the week. It's been a quiet start to the financial markets on the indices. Both the UK and the US indices are finding an element of support at the 20 simple moving average. Here at Sublime Trading, we're big users of the moving averages, particularly the 200 moving average, which is a proven indicator of the long-term trend. It prices above, price has a bullish bias; it prices below, price has a bearish bias, and we don't really go against the bias. So we look for long opportunities above the 200 moving average and shorting opportunities below the 200 moving average. We then look at the 20 simple moving average and the 50 simple moving average as areas of support and resistance. So if you look in a little bit more detail, currently what we're seeing is price finding support at the 20 simple moving average. This is significant because this could then push price to newer highs. If it's broken, then we could see further weakness. So it's really a waiting game now to see in which direction the market goes in relation to these key levels of support and resistance, and once we start seeing these levels broken, then we'll get a clearer indication of the trend direction of the market. So let's go ahead into the charts and get an idea of what we could see through today and potentially through the rest of the week.
So guys, if you're new to these daily updates, then I recommend starting with the recording that's pinned to the top of our Facebook page, so you get a good idea of what I cover in the chart section of these daily updates. Okay, as always, this is our three-screen setup. We have the monthly in the top left, weekly in the top right, and our daily chart down here across the bottom. Starting with the monthly time frame, we can see that price is still finding support at the low of February 2016. May so far is looking bearish with an element of resistance at that 6,000 round number. If we move across to the weekly time frame, price is below the 200 moving average and the 50 simple moving average. We can see this pullback that price is currently in. And if you come down to the daily time frame, we can see price is below the 200 moving average as well. But if you look at current price action, you can see that it's below the 50 simple moving average, where it's finding immediate resistance, but also finding support at the 20 simple moving average. So what we have is a squeeze, and we can see the way the 50 and the 20 are converging. So ultimately what we want to see is a breakout and a clear trend direction. If we get a breakout above this high, this will suggest strength to the upside. If we start seeing support levels being broken, then we're likely to see weakness back to the low of March. If the low of March is cleared, then we're in further bearish territory. For now, we really want to be standing aside. If we move across into the US indices, starting with the monthly time frame, we can see price is still above the low of last year, which is acting as support. Bearish May so far. Move across to the weekly time frame, we can see that price is below the 50 simple moving average, but currently trading around the 200 simple moving average, just below it at the moment, which is acting as resistance. So is this now a move to the upside, a pullback, and then another leg up, or are we going to see weakness back to the downside? If we come down to the daily time frame, we get a better idea of what potentially could be happening. Price is below the 200 moving average, but if you look at current price action, we can see it's finding support at the 20 and the 50 simple moving averages, which are acting as support. We've also got a golden cross with the 20 above the 50, but remember, it's price that is our primary indicator. Moving averages are lagging indicators. You don't want to get caught up in moving averages and use them to predict what price is likely to do next. It's a huge mistake. We want to focus on price and then let the moving averages confirm what price is saying. So if we get a breakout above this high, then we could see strength to the 200 simple moving average. If you start seeing support levels broken, then we're likely to see weakness back to the low of March. We'll see a similar setup on the S&P 500. Price found support at the low of last year. May so far is looking slightly bearish. If we move across to the weekly time frame, price is above the 200 moving average, but below the 50 simple moving average. You can see that 3,000 round number as well, acting as resistance. On the daily time frame, price is below the 200 moving average, which is also clustered with the 3,000 round number, and this weakness in the last few days has taken price to the 20 simple moving average, which is acting as support. You can see there was a bounce off the 20 simple moving average yesterday. Again, a golden cross, but means very little until we actually start seeing resistance levels broken this high, the 200 moving average, the 3,000 round number, the 50 simple moving average, then we're likely to see strength to the upside. Again, if support levels are broken, then we could see weakness back to the low of March. On the Nasdaq, leading the way in terms of price, closing above the high of last year. But if we look at this month so far, we can see price trading around that level. We really want to see the high of April cleared to suggest further strength to the upside. Now, on the weekly time frame, price is above the 200 and the 50 simple moving averages, currently in a little bit of a consolidation. So again, is this an end to this pullback and a move back to the downside, or are we seeing strength back to the all-time high? Well, if you come down to the daily time frame, we can see that price is above all three moving averages. The 20 simple moving average acting as immediate support. We had a bullish day yesterday, so what we now want to see is potentially further strength through the high of April and then further strength back to the all-time high. So if we move across to the S&P 500 mini, which gives us an indication of pre-market action, starting with the monthly, we can see that price, of course, is trading below the low of last year, which is acting as support. May was looking more bearish earlier in the month, but we can see the bulls are coming in and starting to push price back up. There's a bit of a wick to the low of May, but we're still very early in the month. This could look very, very different, but at the moment we can see the bulls are starting to come in. If we look at the weekly time frame, price above the 200 moving average, but below the 50 simple moving average. A bullish week so far, but we want to see resistance levels cleared and that 3,000 round number to suggest strength. If we come down to the daily time frame, price is below the 200 moving average and that 3,000 round number. However, if we look at price action so far this week, yesterday was a bullish day and that momentum has continued so far through today. But remember, it's still early days. It's still very early in the day today, and of course in the month of May. But we always want to look at the end of day candlestick. The institutions come in towards the end of the day, and that's really when we get an idea of what kind of candlestick we'll be having by the end of the day and what that could potentially mean going forward. So we are seeing bullishness come in. Let's see how today plays out, and then we get a better idea of what the market is intending to do. We really want to see the high of April, the 200 moving average and the 3,000 round number cleared to suggest further strength to the upside. That's me for today, guys. Please like, comment and share. Let's get these videos out there. Let's get people understanding how to use the indices to build a solid investment portfolio, and I will see you on tomorrow's recording.